Welcome back. And now it's time for Forum Daily's Market Update with Catherine Murray, host of The Buck Stops Here. Take it away, Catherine.
Hello, everyone, and welcome to your weekly market recap. I am Catherine Murray. Well, we are seeing continued strength in the North American equity markets. And to start, we'll take a look at those U.S. markets. They are higher, and in fact, the S&P 500 as well as the NASDAQ are on track for 6 straight days of gains. So looking to end the week higher once again, with some specific strength behind tech shares. We'll go into that in just a moment. So we are seeing a real bullish narrative within the marketplace today and over the past week or so. Why is that taking place? I would say in large part, very strong growth out of the United States. GDP this week, yesterday in fact, came in at 3.3% versus expectations of 2%. So a huge beat, one we really don't see quite often. Coming in much better than expected, and that is really giving quite a bit of a bounce to the broader markets and sentiment in general. We also have the view that the U.S. Federal Reserve is in fact stabilizing as it relates to their views on rates. The market still is expecting that they will cut rates this year, but again, given that growth that we are seeing, it may give them a little bit more of a pause in their outlook in terms of lowering rates. We will hear from the U.S. Federal Reserve next week. Also, of course, earnings perhaps have been coming in a little bit better than expected. That's debatable. But bottom line, you are seeing better than expected growth across the board in the United States. Now, the bear case as it relates to the market, which clearly is not winning out right now, is that we are in fact seeing lackluster earnings results, and that the S&P 500, the beat rate on earnings is coming in less than we've seen over the past 5 years. So a little bit of a mixed picture with respect to the earnings. Also the bear case, geopolitics, and of course, U.S. presidential elections in 2024. And as I mentioned, tech results are coming in better than expected. Big week next week for some of the tech companies. But bottom line, those are the names that continue to perform very, very well in the market. NVIDIA in particular, and that's in the back of the AI boom that we are seeing, or at least the view that we will have a boom in AI. Away from that, as we take a look at the Canadian market, TSX is in a very tight trading range, looks to be moving higher on the week. So recouping some of the losses that we experienced last week. So a little bit more strength here. We are seeing WTI down a little bit, but it is on track for weekly gains. I should also mention that we are seeing Bitcoin up by over 4% today. So we've seen a nice rebound in Bitcoin, certainly in 2023, and a little bit choppy this year to start, but we are seeing some nice moves higher now. Of course, the big news here in Canada was the Bank of Canada's decision to stay pat at 5%. This was on Wednesday. Interestingly and importantly, though, they did trim their growth expectations for the Canadian economy, essentially saying that the Canadian economy is stalling out at about 0% growth. So just take a look at that versus what we're seeing in the United States. We are also hearing from the BOC, the Bank of Canada, that it is too soon to be talking about rate cuts. So still a debate in terms of if and when we will see those rate cuts. The market is expecting that the BOC will in fact cut rates at some point. And keep in mind that is because rates have been so high and jumped so aggressively that we are seeing that impact the economy, slowing down the economy, which was part of the goal in order to decrease inflation. But have they overshot to the downside as it relates to growth? Because we are seeing, as I said, 0% growth. Away from that, I would note for next week, it's going to be an important week. We will hear the GDP for the Canadian economy next week, so that's very important. Also in the United States, as I mentioned, we will hear from the FOMC, the Fed, as it relates to what they're going to be doing about rates. We will also have peak earnings period for the United States next week, and jobs. Expectations in the United States are for 185,000. Versus 216,000 in December. So a lot to watch next week as it relates to Canadian GDP and the U.S. Federal Reserve, earnings, and as I mentioned, jobs. I'll leave it there. Back to you.
Thanks for that, Catherine. For more coverage on the markets, be sure to tune in to The Buck Stops Here, Sundays at 9 a.m. Eastern, only on the Newsforum Network.